What is up guys, my name is Ignas, welcome back to the channel. Today we are taking a look into one of the largest semiconductor company from US, Texas Instruments, ticker symbol TXN. A month back they reported a great quarter, but the stock is still down 12.5% on the year to date, from $190 to $167 per share. And they didn't really go anywhere in 2021, as in 1 year the stock is also down for 3.67%. At least on the 5-year history we have some growth, where the price went from $77 to $166 per share, or an increase of almost 116%. Price to earnings right now is at a reasonable 20.17, and the company is paying a dividend, which after the recent slowdown the yield is at 2.76%. So for our today's analysis, first we'll take a look into the most recent earnings report, then financials and fundamental ratios. After that, what analysts think the stock should be trading at next year, then if any super investors are holding it, and lastly we'll check into the technicals of the price chart. I believe that this will be an interesting one to look into, so let's start. On January 26th of 2022, the company reported earnings, and Texas Instruments stock jumps after chipmaker crushes fourth quarter estimates. So for the quarter, the company reported $2.27 in earnings per share on sales of $4.83 billion. So both top and bottom lines beat expectations, as analysts forecasted $1.95 per share in earnings on sales of $4.43 billion. And this was an improvement over last year, as on year-over-year basis earnings rose by 26%, while sales climbed by 19%. Now for the current quarter, guidance is also great, as they expect to bring $2.15 per share on sales of $4.7 billion, where analysts expect it to be more similar to last year, where they earned $1.87 per share, and sales should be coming in at $4.37 billion. So both earnings and guidance is a beat, but they didn't convince investors yet, as for the last month the stock has been going lower. But what if we take a longer history to look into? These are here the revenue results for the last 5 years. So back in 2016 revenue was at $13 billion for the trailing 12 months, then in 2017 it increased to $14.6 billion, then 2018 topped at $15.8 billion. After that we had 2 years of decreases, as for 2019 it was at $14.75 billion, and we did bottom in 2020 at $13.7 billion. But the last 4 quarters were really decent, with over 20% year-over-year quarterly growth, topping at the second quarter of 2021 with an increase of 41.4%. And now with the most recent quarter here, we are at $17.6 billion in revenue for the trailing 12 months. Next part I want to take a look into is price to earnings. So back in 2016 it was at 18.4, then in 2017 with the price going up and earnings dropping a bit, price to earnings went to 26.03. In 2018 as earnings jumped and price decreased, price to earnings was at 15.6, which was at the lowest of the last 5 years. Then with earnings going sideways and price increasing, in 2019 we had price to earnings at 23.08. As the price was surging in 2021, we had the peak in price to earnings at 27.97, and with the recent selling the price to earnings went down, where we now have it at 21.4. So we did have the opportunity to get into the stock under a price to earnings of 20. One was back in the first quarter of 2020, then the fourth quarter of 2018, and then again somewhere in 2017. So if we believe that earnings will still be consistently increasing, then buying at the price to earnings of 20 doesn't seem like a very bad idea. Now next part we'll take a look into are the shares outstanding, and this is pretty much what we want to be seeing, besides those last few quarters. So back in 2016 shares outstanding was at 1.023 billion, then in 2017 it already decreased to just over 1 billion shares, in 2018 we had it at under 1 billion, then in 2019 it dropped to 0.95 billion shares, and we reached the bottom in the middle of 2020, where it was at 927 million shares. After that we did saw a few quarters of increases in shares, where in a year it was up for 1.08%, so an increase of of around 10 million shares, but the most recent quarter here is again a decrease of another 1 million shares. So overall, this continuous decrease in the shares outstanding is a trend that we are glad to find out. Another way for the company to give back to shareholders besides stock buybacks are dividends. So this is here the dividend yield history for the last 5 years. Back in 2017, the dividend yield was at 2.31%. Then in 2018, as the price increased, the yield went a bit lower to 2.24%. In 2019, as the payout dropped, the yield went down to 1.79%. Then as the payout was brought back to trend, in 2020 the dividend yield went up to 2.76%, even reaching the top of 3.13. And then in 2021, as the price was surging, even with the payout increasing, the yield was still going lower to 2.17%. But this year, as the price was going lower, the dividend yield did increase a bit to now 2.58%. Now I did add Texas Instruments into my dividend stock watch list. If you would by any chance be interested in accessing this tracker by yourself, then do follow the second link at the top of the description. So this is here again the dividend yield history for the last 5 years, and on average in 5 years Texas Instruments had the dividend yield of 2.36%. So in 2017 it was mostly under the 5-year average, going to 14.35% below it. Then in 2018 we had it over the average a bit, 18.72% to be exact. The worst time to buy in was 2019, as the dividend yield of 1.79% was 24.11% under the 5-year average. But with the markets dropping in 2020, it reached the top at 3.13%, which is now 32.71% over the 5-year average yield. 2021 was not that great, but with this year's market sell-off, we now have a yield of 2.76%, which is in fact over the 5-year average for 17.02%. So it's now one of the best times to buy the stock, at least for the dividend yield. Now we checked on the company's fundamentals history, but what do analysts expect from it going further? Here we have 28 price targets of analysts for next year. The predictions range from the lows of $142 to the highs of $240 per share. The average out of these expectations is $198.96, and currently Texas Instruments is trading at $166.74. This means that analysts predict that for next year the share price should go up by 19.3%. Now let's take a different angle. So these are here the earnings per share estimates for next year, and 28 analysts on average predict that next year Texas Instruments will be bringing $9.48 per share. If we assume that the price to earnings ratio remains as it is, then with this increase in earnings for next year we are looking for an increase to the share price for 3.1%. So overall analysts seem to be quite bullish, expecting the share price to go up in a year from 3 to almost 20%. Now let us take a look what Superinvestors are doing with their holdings. So currently 4 portfolios are holding Texas Instruments. One of these added into their position, but one did sell a bit out of it. So Jensen Investment Management currently holds over 1.5 million shares, valued at almost $300 million, and they recently added almost 4% into their position. But First Eagle Investment Management reduced on theirs. They are holding 3.3 million shares valued at $625 million, and they did slightly reduce on their position for 0.7%. But the most concerning part seems to be the insider activity. So in the last 6 months they managed to sell shares worth of almost $24 million and unfortunately bought 0 shares back. If we now take a look into the 1-year history, it's not that much of a change at $27 million, meaning that most of the selling was done in the last 6 months. But then the worst part begins if we check on the last 2 years. So there was one transaction to buy for almost $1 million, but insiders did sell 120 times for around $264 million, meaning that in 2020 they sold over $200 million into the open market. And since we don't see any transactions to buy back after, that doesn't raise much confidence to go in. For this last part, let's take a look into the price chart. So as we know already, the price did go sideways for a year, moving together with both the 50 and the 100-day moving averages, but it seems that in the previous earnings, on October 27th of 2021, the stock did fall closer to the 200-day moving average. That proved to be a decent support, and it held all the way through to the middle of December, where we started getting those bearish moving average crossovers. So as the 50-day moving average was going lower, it started pushing the stock down, acting as a decent resistance. One of those was on January 13th of 2022, and then again February 2nd, with this huge red candle on the 3rd, and the price going to $175, and then $170 per share. Now we are still getting the bearish moving average crossovers. Next one will be 100-day moving average going under 300-day one, and then that will be followed by the 200-day moving average going under the 300-day one. So I would want for them to be crossing before buying into the stock. We'll see if that proves to be a sound strategy. So we did check on all the points, now let's do a quick recap of what we found. Fourth quarter earnings beat on both top and bottom lines, and they did deliver guidance for the next quarter over analysts' expectations. We saw that revenue slump in 2020, but the bounce back was huge, more than 20% quarterly year-over-year growth. There have been a few opportunities to get the stock with the price to earnings under 20, but with it now being just slightly over it, that doesn't sound like the worst idea. The company is giving back to shareholders by continuously decreasing on the number of shares outstanding. And with the recent selling, the dividend yield is quite up there, 17% higher than their 5-year average. Analysts do expect for the stock to grow next year, with an estimation for the price to go up from 3 to 19%. It seems that Superinvestors are holding the stock firm, but there is a concern that insiders have been heavily selling, at least in 2020. Looking into the chart, there are still moving average crossovers ahead, and that could push the stock to go lower too. So I would wait for the crossovers to happen before starting a position, and would also like to hear that insiders started buying back in. So that was it for today. Make sure to support the channel and leave a thumbs up under the video. What do you think, is Texas Instruments worth picking right now? Share your stance on it in a comment below. If you would like to know exactly when I buy or sell any stock, then consider memberships. By becoming a member, you will get access to Discord, where I share all my stock watchlist and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. I've recently did an analysis on a competitor name, so if you would be interested to check on that, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.